Welcome back, everybody, to Be the Trader. Today, I have a very special guest. He's been on here before, and today we're going to talk about specific topics instead of just doing the standard interviews. And today I got Mike Spinosa. Mike, welcome back to the show, my man.
Appreciate it, buddy. Pleasure to be back. It's always fun.
Yeah, man. It's great talking to you. I've been in touch with you ever since, and a great guy. For everyone who doesn't know who Mike is, he's a mentor / coach and day trader. Make sure to go watch his interview I did with him on a previous episode. I'll put it in the show notes below. So that way, if you're like, well, I want to learn more, that's another way you can learn more about Mike. So today, I know Mike and I wanted to discuss kind of the past few months, how the market has been and the psychology, and then dive into that. So Mike, if you want to start, and then I can just try with you. Go ahead.
Yeah. So I think, when was our last interview? Was that April?
Oh man, you're going to hit me with that right off the bat?
I'm trying to gauge where the market was, you know?
It probably was April. I think it was April.
So I think right since April, the market, we've had like 4 months or 5 months of just nonstop action in small caps.
Oh yeah.
Especially the small caps, right? Because we've seen like crazy volume that we're not used to, like 100 million plus is the new norm, right? Yeah, pre-market, right? Like, oh, it's 7:30. Like, who's playing 10 million shares at like 5 a.m.?
It's crazy.
So it's been a fun market, a lot of opportunity, but I think recently you see how it slows down almost overnight. And it's something I touch on a lot in the community I have, is like just keeping your mind right and not focusing on like where we were, but where we are, Yeah, man, I agree. Cause like I was saying just the other day, I mean, I don't trade often because I'm very selective. I'm very patient, but like, nice. Yep.
It's that past couple of months, I think it was June, July, it was almost like every day for me, it's abnormal, where I was placing 2 to 3 trades a day, maybe
exhausting.
1 a day. Yeah. And it's like, but it was
days
exciting,
were exhausting,
right? But
it was exciting.
It was exciting. I was like, man, this is crazy. And not only that, but like you said at the beginning, like we had stocks that were up 100 million before 9:30 open, right?
Yeah.
And I was like, this is bizarre. And we had stocks up 500 million shares traded on the day. And I'm just like, holy crap. And there wasn't just one, Mike. It was like
everyone.
Yeah, that's what I'm saying. I was just like, this is
like Jivo, a billion shares. I don't think, right?
And it's crazy.
Like, it's ironic because it's like the trashiest names, right?
It was. And at that time, like I was trading more frequent, and then we just hit a wall, right? We just hit a wall where things just, like all of a sudden, where the norm was 100 million, like 50 plus million shares pre-market at the open, and then now it's like dry, like it's like a desert, right? And
it's like fighting for crumbs, right?
It really is, and so much so where, to give them perspective from my point of view, like last week I placed 2 trades all week, right, and the entire week, and then the week before that I think it was like 3, and so that was like a normal day for 1 or 2 days the past month, right? So it's just like, and it's amazing how, as traders, like for me, when I first started trading, like my first 2 years were rough. Like I sucked. I was losing money every day, and there was times where I would find some consistency, during the slow months, and then all of a sudden the market got real hot, and then I just lose a lot, and then I went through a pattern where I would win during the hot months and then lose when it got low. And it's because I wasn't adapting.
Which is common.
Right? Yeah. Like I wasn't adapting.
That's human psychology. It's the same reason casinos stay in business, is because we can't help ourselves, right?
Mm-hmm.
So that's where I always focus on managing your expectations each day, and like coming into each day where if by 8 or 8:30 you don't really have anything unwatched, and start to be like, maybe the table's cold today. So like I'm the type of trader where I don't like to not trade for multiple days. I won't trade for like a day or two, but at a certain point, because it's my main income, I'll look at it as like I need to put money to work because that's my job. If the edge is there, so I'll just take dramatically less size on slower days. Because the analogy I've been using lately in my community is, if you're a blackjack player, when the table's cold, like when I go to the casino, I want to be at that $5 minimum table so I can just sit there and be fine during the cold streak, right?
Yeah.
But when it gets hot, you have to hit it hard, because then you're not so thirsty during the cold streak also. So when you drop your size, you see with these small caps, if I can still get a 10 or 20% move, even 15%, I'm going to take that trade,
Yeah, Yeah.
just
That's
with dramatically less size.
Yeah, that's true. I mean, because it's like I think I saw you post that. I don't know if you post that or I heard you say that where you're like, I'm just cutting my size,
Yeah.
and more so being adaptive to just taking smaller positions and smaller moves because you want to generate income over time.
And with more stocks instead of one stock with big
Yes,
size.
that's what you said. Yeah.
Yeah.
Yep.
Because it's like you'd make 4 stocks. If you lose on one, 5%, but you make 10% on the other 3, well, technically you still made 25%, as opposed to waiting for that A+ setup that might offer you 30% plus,
Yep.
So that's what works in this slower environment, because in my opinion, the slower times do come. And if you're like me, I don't really just like to sit still. I won't trade when I don't need to, but I don't like to, be not trading for multiple days.
I'm the same way though. When you said at the beginning where you would, if you see something, usually by if I watch all pre-market, for me, like I know by the time the market opens, like I've already made a decision, like there's going to be trades today. And I've made a decision to where I just sit there and be like, you know what, there's nothing here. I'm going to go ahead and I'll watch like the first hour just in case. Cause like sometimes things can happen.
That's why you have scanners, right?
Right. And I'll watch like the first hour, but like after that, like I'll walk away for me personally. Cause I know like, I mean the odds, like I've tracked it, man. I know that if I don't place a trade in the first hour, the trades after that hour are usually just wrong.
When you come and you're like, I just banked at like 1:30, but I didn't trade all morning. Lately, unless it's these, which we can get into, these algo stocks where they fade them all, and as it close. But by 9 o'clock, year one, when I didn't have a trade, I'd be aggressively searching. Like I'd hop on stock and be like, what are they talking about? And so I'll be at my computer at 6 a.m. every morning. And as the day progresses, manage my expectations as we get closer to the open. This way, I'm slowly minimizing my FOMO and my ability to become just focused on the dollars as opposed to the process.
Yeah, that makes
That's
sense.
helped me dramatically because my biggest losses sometimes come from taking A+ size on slow days.
Yeah,
and you get back like 3 weeks of gains just being an idiot,
And that's so frustrating because I think a lot of traders can probably relate to this specific thing because right here, what I used to do, exactly what you just said, is on the slow months, I ran into this trap where I would trade the exact same size and on setups that for some reason, when it's busy, specifically like your A+ is this, right?
Yep.
And then when it's slow, for some reason, sometimes if you're not careful, your A+ will evolve and become this, like you're like, because it's so slow, you're like, there's nothing there. So this is now an A+, because like I see something that's similar that might represent an A+. So I'm willing to just take it. And then you take it with the A+ size that usually is an A+.
Yeah. And then usually the lack of liquidity or the quick, the slippage. And then you're like, that happened to me. Maybe it was last week or the week before. It was a Friday. And like my whole strategy, I wire out gains every Friday. That's my risk management, to not blow house money and think like, oh, I'm up this, So each Friday I'll wire out, and then I kept trading that PLM. I think that was a recent crazy.
PLM, yep.
And I went from being like up $5,000 on the day to down 30 because I was taking A+ size on a B setup on a Friday that was slow. It was the only mover. It traded like 200, 300 million shares. And when you break that rule on one slow day, you can give back days or weeks of gains. Thankfully, I know this algo has been selling into the close, so I waited till the close and doubled down and made it back. But it wasn't even the stress and it was all the desire to make money. It was before Labor Day, so it had the phone of like the long weekend. Like, let me just get in one more,
let me get that one more hit real quick.
Yeah,
it's just,
and then you're dead.
yeah, you really are. It's funny you say that about that because PLM before Labor Day, like that psychology there, like a lot of traders are like, man, we're gonna have a long weekend, so you try to force things, you try to like make things happen that aren't really there. Maybe try to size them more because you've had no trades all Monday through Thursday, and you're like, holy crap, I've made no trades. Which I did this. I think I did this on this past week. It was my second trade. It was an A+ setup, and I was like, holy crap, an A+ setup is here. And I traded it pre-market a little sloppy. I was sloppy. Pre-market, I was sloppy, and I was very upset with myself because I was like, holy crap, like, why did I trade this so sloppy pre-market? And sloppy to me is cutting before my risk is hit. And I was just like, crap, I cut it, and then it just dropped. I'm a short seller. It dropped, and I was like, great. I missed the setup.
Pre-market's tough with that.
It is.
It's like you can't size in, and then you're obviously locating early. But I'm a big believer of like the A+ setups. Like I don't know many people that size in A+ pre-market. Usually it's at the open because you get that trap at the open.
Yep.
And that's been a rule of mine is I use my scalp size is the same as my pre-market size. That's my max size. Like 5 to 10,000 shares is my max pre-market size.
Gotcha. I don't know, man. Like I used to never trade pre-market, but this new market change with this bigger
it's
volume,
different. Yeah.
Like for me, I've had great runs pre-market for this past.
You can make a ton of money pre-market. That's the thing.
Because I think it was in July pre-market. I think I talked to Dux and he was on the show not too long ago where
I watched that
pre-market, dude, everything died pre-market, everything. Yeah. Like, and it had massive volume. Like everything had massive, like it was at the open. Like everything was just like trended nicely. They had nice breaks.
What about the longing of pre-market though? These things
I don't know. I don't really long. So you tell me.
Yeah. So I'll long pre-market, but like dramatically lower size and account for the lack of liquidity. Mm-hmm. But like when you see these things at 7 a.m. by 8, they're up like,
yeah, they're up a ton.
There's just as much money on both sides, but I think there's a lot more because the amount of accounts that have been opened. And I think most new traders don't short sell. Everyone's doing the whole like getting up at 5 and longing these things on no liquidity, and they'll skip bucks, and then it's on everyone's radar. And then more people start getting involved. And then before you know it, it's a top gainer on the day.
Really? Yeah, absolutely. It's you mentioned a couple of things. You said what you've noticed is like an algo thing happening literally like this past couple, I don't know if you say, what would you say, past couple of weeks or months?
Months. And I talked to a couple brokers that have confirmed that there's institutional accounts that come in, they flip these small caps intraday now. So like, this is my conspiracy theory. I've talked about it, whether people believe it or not. But so like order flow, how Robinhood and all them, they sell order flow. That's how like Citadel and all these high frequency firms make a ton of money, right?
Help me understand. I don't understand that.
So if read Flash Boys, that's a great book. It talks about how, so like when you buy a stock and you're about to push buy, your broker, not if you're using a direct access broker, but like an E-Trade or a Schwab or one of the big four, they'll send that information or sell it to high frequency trading firms that someone's about to buy this many shares at this price. And if they have that information milliseconds before your order, that's how they order hop you. Or decimalize in front of your order, if you've seen that on the tape.
Yes. That little weird gray order right between
So that's how these algos, if you watch these small caps lately, I'd say like half the orders are decimals, which means that that's not any retail. We can't fill any of that. It's either a market maker or it's an algo. On top of so that's order flow, them selling the buy or the sell. And I think the new thing that brokers are doing, because commissions are zero now, is they're selling inventory on shorts. So what's the only piece of information you need if you're a quant and you're writing an algo where you could determine how to manipulate a stock? There's two pieces: the float, which is the supply, and the shorts. Because if you know the average short price and the amount of shares, and you're a $100 million hedge fund with $1 billion in buying power, what's to say you can't come in and buy a float of 10 million shares of a $3 stock and squeeze these shorts to where they buy to cover and you're selling your long to them? Mm-hmm. And in a nutshell, I think that's what's happening on these stocks intraday and these small caps, because the macro edge, the overall market's very difficult, I think. I don't know anyone that's nailed the bounce and SPY or any of these, So I think they're starting to get involved in small caps, and that's what you're seeing lately.
Interesting. It's funny you say that, because I don't trade to the end of the day, like really, but I kind of see, I got to pay more attention to that.
So I think sometimes they get trapped too, though, but sometimes they like PLM, it's that 2 to 4 o'clock hour where they unwind the whole thing. And I think a lot of these algos, they work a core too. So they'll sell 1 million shares and then come in, soak another million, and then re-squeeze. You know,
I think it's something to be said though. Like for me, like I think the longer you've been trading, I'm sure you kind of recognize this, is you can kind of read all of that in the tape. Like you can see that rebuyer, or that reseller, or
it's
like
all levels.
Yeah.
Because the time and sales now, they're getting smart where they're buying like 100 share clips just fucking million times over. And they're not showing size. But when you see that size, like the other day, I forgot what stock I was trading. You'd see like 500,000 shares go through and the stock didn't even budge.
Yes, I think
that's dark pools.
Oh,
that's
what
dark
stock
pools.
was that? It was just this past week. There was a stock that I traded, and it was the one that like
it was.
It like spiked like $1 or $2, and every time it got there, like it rushed there, Mike. It rushed there like massive volume, and as soon as it got there was no orders there. As soon as it got there, it like teleported straight back down. Yeah. I was like,
and that's all these dark pools.
There's a big guy up there.
And and that ain't no Robin Hooder, you know. Because I'm at the point now where I understand how they operate, but it's getting the executions in front of them. Or like I'll slam the bid on the short and put my order 15 cents below the bid. Because if I'm slamming 10 or 20,000 shares, then it still won't fill when it's dropping. So these algos have an edge in terms of getting better fills at executions than all of us retail traders. And that's why direct access brokers are more important now than ever.
Is a direct access broker something like I'm already using, like Cobra?
Yeah, like if you can choose your route.
Okay, gotcha. So for you and I, it's probably not that big of an issue. I just don't really see.
When you start to trade decent size, it becomes an issue because your fills, they can hop in front of you, and you have to start to really scale.
Because they can see your size. That's right. Because they're probably looking at, okay, Mike, you're trading X amount of shares. Hey, I'm going to get in front of this guy because I'm going to be able to sell into him or so forth.
Yep. And here's something interesting I found out recently. This is a little bit more in-depth stuff, but on DOS, you can show your size.
Yep.
So I found out recently because one of my buddies, Stan, who's on here, shout out to Stan Guzman, he's the homie. If you show 1,000 shares, but you really have 10,000, and that first 1,000 fills, then the other 9, the next 1,000 goes to the back of the line of the order flow. So then the question, and I found this out recently.
Oh, okay.
I wouldn't get filled on SSR on like Kodak one time. And when it spiked up like 30 cents above where my orders were, it didn't fill. And it's because I was showing like 500 shares, but I only filled 500 out of 10,000. Like, how does that happen? But it went 30 cents above. That's because this goes down to order flow and where your order is positioned in the line.
Yep.
So this is all stuff that I'm starting to learn about because this is how these algos get their edge, is like where they are in terms of getting in front of you and their size. It could be the difference between getting filled or not getting filled.
It's almost, would it be more advantageous to not hide your size at that point?
That's what I'm doing lately.
Yeah. Just get it. I'm like, because if you hide they're like trying to get in your head, like, okay, this guy always hides his size. I'm going to just get in ahead of him, and now you're not getting filled.
And they can see everything. If you have like level 3 or, level 4, like market maker quotes, like they see, even if you hide it, they can still probably see what you're, so this is where it's like a little war that's occurring, in the level 2 and tape, really, when you start to, up your size. Like, I don't really take crazy size. My max size would be like 40 or 50,000 shares. I know people out there that take like a couple hundred, but I'm at the point now when you get to that level where you have to start to think about this stuff.
Are you somewhere, would you say that, are you more short term? Like, I don't know specifically how you trade. Cause like for me, like I'll enter a position, right? And I'll end up holding it. Like I'm pretty much an all day fader kind of guy.
Yeah, so
like
I work a core, and like my average hold time is like 20 minutes or something stupid.
Gotcha.
But I'll like recycle, but I'm much more of like a get in, lock in gains, re-enter, kind of playing the trend as opposed to holding all day and not entering or exiting.
Did you try one or the other before you came to this, or is it always?
Yeah, I just have zero patience, like in life too. I'm just, so like. It's not going to change in 30 years. It's probably not going to change now.
Yeah. No, I hear you. I tried that. Like I tried recycling, and the psychology of that, like sometimes, like, maybe like, cause you'll bring your average down. Right. And then you got to maybe adjust your risk. And then like I was doing that, and when it works, it's like awesome. But then whenever it didn't work for me, I would get more frustrated because I was like, man, I just moved my risk and it never hit my original risk. I'm like, now I'm out and it's continuing to fade all day. I'm like,
this is where less is more sometimes, because if you rather have the less size with the better average than the more with the worse, right?
What do you mean?
So like, I'll still trade. Like I told you, I'll try and trade as much as I can every day, and I'll just take smaller size then on some of those setups. And you can still make a lot of money. Like my smallest size would be like 5,000 shares on something. And even with 5,000 shares, it's still great money. But if you start to trade 10 or 20 and you keep adding, you'll immediately go from great entries at first to I just completely screwed my average up to like where now if it flips 10% against me, I'm red big, you know?
Yeah.
So the recycling is definitely an art as opposed to some people get in the whole like trigger happy mental where they'll like keep adding very fast, you know?
Yes. And it's hard to get that balance. It has to be.
It is.
Like, cause you're like, you should only add on pops at certain levels. And then eventually you start adding on drops and like you start just adding like, oh my God, it's working. And then your average becomes shit.
What I heard from another trader that I wrote down on my desk is you trade the stock as if you're not even in it. And I thought that was a good tip.
Yeah, that is.
In terms of recycling, trade your entries and exits like you're not even in it. So I try and think that way.
Do you think when it comes to recycling, are you thinking more so of I'll enter and then cover half, enter, cover half, enter, cover
Not so much half. Like I've started to see more success as I increased my scales. So I used to scale in halves or thirds. Now I'm scaling in like fifths or sixths. And I've seen way more success because this is how these algos operate. They work a core and they cover and buy and take those 20, 10, 15% moves over and over again, because the benefit with recycling is if you're wrong on the trade, you could still be green or break even because you were taking advantage of those pops or drops, right?
Right.
How many times have we seen these small caps reverse hard, you know, like into a halt, you know, like.
Yeah, no, absolutely.
And it's like, if I didn't book any, then shit, I'd be big red, you know, but I just traded it really well. And if I was too patient, so that's where recycling is a benefit, is because you're being more aggressive, but if it reverses, you can still be green.
So it's like you enter a core, like the core is the biggest position, right? Your initial position, initial entry is probably the biggest position.
Like if you're doing 10,000 shares, like if I'm doing 10,000, I'm selling and entering in 2,000 clips.
Gotcha. But your initial entry should probably be more than 2,000, right? It should be like 5 or 6.
So I'll scale in 5 orders, 2,000 shares.
Gotcha. And then
across, like if it's a $2 stock and I'm trying to get in risking that 250 level, maybe I'll throw 2,000 at 220, 2,000, 230, 235, 240, you know?
And then once you're in, you would start to recycle 2,000 at a time?
Yeah, like every 10% drop, I'll lock a little in.
And then add back that and then go. So then you'll still have your core, but you'll be playing with a fifth.
And you're dropping your average, but at least you're locking, you have money locked in. So it's like peace of mind to me.
Interesting.
Because there's been a ton of times, man, where like you could short a stock at like 250, it drops to 2, and you're like backside, and then all of a sudden it's like, and it's like if I didn't cover any, I'd be like, down 5 figures, you know?
Yeah, I think there's something to be said though with, I think 100% agree with what you're saying, but for me, like I kind of want to play with that sometimes, but then part of me is like, am I slipping into the mindset of I need to make money versus stick to my plan, right? Yeah. And that's a very delicate, especially for a new trader. Like you've been trading
very delicate now. Yeah,
you've been you're at that level where it works, right? You can do this, but for me, like I've only been consistently profitable on November. It'll be a full year, and so like. Nice, that thank you man and for that, like I'm always aware of like now, like only thing that makes me profitable, I don't know if this makes sense, I'm sure it will to you, but like it's not because I'm a good trader, dude. It's because I stick to a process and plan and rules. That's the only reason I trade.
Traders aren't smart or like sophisticated. Like the guys that I know of that make the most money, they're not like neurologists.
We're not. We're just guys.
We're just disciplined, and you need rules because I have rules too.
Yeah.
And the rules protect you from yourself. And everyone has different vices or demons, as I call them. So like, this is where everyone has to make their own journey. You know, like I give my the Trade Like Mike crew like examples of my rules, but those are catered to me. So it's like kind of create your own based off of those.
Yep.
You know, like certain size for SSR stocks I have, like max pre-market size. With this new volume rule, like if I think the stock's going to trade over 100 million shares, and I'll avoid the short till at least after 10:30.
Yeah.
Certain rules that in the long run they protect you. Maybe they don't work all the time, but they protect you.
It's funny, you know, I like that you said you give them examples of the rules that you've created for yourself, because ultimately what I've learned, like in the first 2.5 years, like I was just taking someone else's rules and just using them all.
And the exact same rule, right?
Yeah.
Like,
yeah. And what I've learned is like, they're to fit that person. And it's funny you say that, because you're so true on that, where it's like that SSR rule, for example, is for you.
Yeah.
You've learned that for you need that rule because of something in the past happened. But some other guy might listen to this and he might kill it on SSR shorting and murder it. But if he just listened to you and took your rule, he hurt himself. So it's like, you got to get these rules. And you kind of like start to see, does this work for me? And is this something that I've noticed that I need? Right? Like
those are based off your samples.
Yes. Right? Like, that's 100%.
Like I stopped trading SSR stocks for a couple months. I was like, if it's on SSR, I ain't trading it. People said, like, why are we trading it? Because I'm just not trading SSR stocks for the next couple of months. And I saw the best progress in my trading just from the simplest removal of something. You know?
I did the same thing with pre-market. Like I stopped shorting pre-market for about, I just saw myself losing every time I short pre-markets. Then I gave it up. And then I do it now. But I mean, like, I think just like you start
I did that for a while too.
Yeah. Like if I stopped shorting pre-market, and then I became like way more profitable. I was like, holy crap. Because there was like mental games that I had to play with myself because I lost pre-market or some bullshit. But then after the fact, like after you have that clear head and you've been consistent on this new way of never trading this way, then all of a sudden you look back and you're like, okay, well, because I don't know about you, like you just said you didn't do SSR and then you started doing SSR again. It's because you start to look at it with a clearer head and you're like, what rules can I put that can make me profitable in this way? Because you see the opportunity, like we see it, but we're just not trading it right. And then you created a rule for yourself with your size, or like for me, like I have a rule, like I'll trade pre-market, but it's like a certain size or after a certain time, or if a certain amount of volume has traded pre-market, you know, like
that's important too.
Yeah. Like if I don't, like people may hear this and be like, oh, Alex trades pre-market, I'm going to trade pre-market. And then they're going to get blown up. But like for me, it's not simple like that. It's like, if it's trading, 50 million shares pre-market, I'm going to trade that. But if it's trading 10,000 shares pre-market, I'm not touching that.
Need rules because these algos, they don't have emotions, and that's why they crush everyone. So you need to think and trade like, so I tell people, think and trade like an algo. Like they don't think about their losses. They don't think about the last trade. They're just worried about the next trade,
Yep, absolutely.
And if you have the rules to at least keep you relatively sane, and like minimize the human flaw of like our whole cognitive biases and whatnot, then you're like way better off. Because I'm all about the EQ over the IQ,
Yes.
Not about like, I barely look at charts on the weekend now. Like I'm not a big stats guy, or like I have my journal and I'm like, let me go do some yoga and like work out and get my mind right for war next week,
Yeah. And that's something people need to really hear you say, because you can have the best setup. You could literally sit. Let me give you. Most people don't know this. I don't know if you know this, but like a long time ago, I don't know if you know Roland Wolf, but I met him, hung out with him for a full week. Maybe it was a week and a half, but he'll vouch for this. If he doesn't, Roland.
No, I would DM him sometimes. I'll call him out.
He's gonna be on the show here soon, and I hung out with him, and this was way before I was even near consistent, And he was just now like rising, and he was like, dude, come hang out with me. So I hang out with him. I don't know how we met and kicked it off, but it was just via Twitter and stuff. And long story short, I was like, man, I was watching this guy just make money, and I'm right next to him and I couldn't make any money. and I was like, but I wasn't trying to follow him. Right. Yeah. I was just trying to see how he traded and then try to learn from that and then do it myself. But what I recognize is it's the EQ, dude. It really is. Like he could press the button and like and not be concerned.
Yeah.
Whereas I pressed the button and I was like, I was like freaking out. Like,
and that's like a time, that's an experience thing.
Yep.
So like that's where when people start out, like your goal, like my goal at first was don't blow up, therefore make a system that will not allow me to blow up. That's why I incorporated the whole wire out thing and whatnot. And if you get past year 2, then you're already like emotionally, you've already experienced a lot. And people have to experience that. But if you don't get to year 2 because you blew up, you know, too quick, and it's really tough because you'll never get past that whole nervousness, you know, like, and that everyone, the biggest thing people say, I can't pull the trigger. Like, you know, like, right, the trade's right there, but I hesitate. I'm like, that's a time thing, you know?
You got to see it over and over and over and over. You got to believe, you know, you got to trust yourself.
You start to get you understand yourself, your emotions. Usually like when I'm nervous is when I should be getting in the trade. So that's like your trigger, you know?
Yeah. Yes, it's funny you say that. So I record my trades, right? And I have a series called Tandem Trading where I just posted the first one where you can see everything I'm doing live and all that stuff.
Nice.
My thoughts before, during, everything. It's not hindsight. So, but I do it like that because it's to help me. You know, it's like because I rewatch it when I fail, and I'm like, oh, that's what I say.
And you know how you felt when you did
that. Yes. And it's like I'm starting to pick up all these triggers. Like for me, if I start to say things like, if I start to stutter, or I'm like, yeah, you know, this one looks kind of, if I say that kind of a thing, like that in that way,
it's human,
I should avoid
human emotion, dude.
Yeah.
You start to watch yourself trade from the couch. It's a Steenbarger from his book. You know, imagine you're just chilling behind you, watching yourself trade. Be like, don't be a bitch. Don't stop out. You know, like, and that's how you start to. That's so much more important in trading than anything else. You know.
It is.
The charts is like, how many times can I tell you, like, it's a head and shoulders, dude, you know, like, but it's, did you execute and were you in the mental state? Right.
Yeah.
It's become everything to me. It's like the screen time is what, you know, the market's what's working in the market, you know, because I think the theme always changes. So if you take off 2 weeks and you came back to this market, you'd have no idea what the hell just happened. So if you just put in the screen time, you're in tune with what's happening, what's working in the market, and you're managing your emotions. It's like 80% of the battle, you know?
That's a good point. Like for example, the case in point for you is if we weren't around for June and July, most of it, and it was like massive volume, then we came in out of the blue and during that time,
like
we
September,
would probably not be trading it right. Like,
yeah, totally. It's like, it's any sport, an athlete takes off for a couple of days, they come back. They don't really know. They don't really feel in tune. And trading is no different. Yeah. Mental athleticism, right?
Yeah, absolutely. Well, look, Mike, I want to wrap this up, but to let everyone know, like, just in case they haven't heard you before, where can they find out more about you and get information from you?
Right now, Instagram, Trade Like Mike. My Twitter, Risk Life Mike. And then I got some stuff I'm releasing in the future. So follow those accounts and then stay tuned. There'll be some exciting stuff.
Awesome. Well, Mike, hey, man, it's a pleasure always to talk with you, have this conversation. Thanks so much, buddy.
Good time, bro. Always fun, man. I'll see you soon.